You're listening to Uranium Spotlight on Tuesday, June 17, 2025. Brought to you by PurePoint Uranium Group, your exploration partner in the most prolific areas of Canada's Athabasca Basin. With a collaborative investment model on district-scale projects and validation from industry leaders Cameco, Orano, and ISO Energy, PurePoint is investing in Canada's uranium future. And now your host, Chris Frostad.
This week on Uranium Spotlight, India prepares to quadruple uranium imports. Kazakhstan leans further east, and the World Bank opens its doors to nuclear funding. Meanwhile, SPUT locks in $200 million to buy physical uranium, and investors take notice. The uranium spot price closed last week at $70.50 a pound, slipping 40 cents from the prior week's close of $70.90. Trading volumes are light, with just 200,000 pounds moving in the spot market, a quiet day reflective of broader summer slowdowns and cautious positioning. But in the big story this week, it's SPUT's Physical Uranium Trust, which yesterday announced a $200 million bought deal financing. Originally launched at a $100 million raise, the deal was quickly upsized due to overwhelming demand. That's fresh capital heading straight into the physical uranium market, targeting both U3O8 and UF6, and further tightening available inventory. SPUT's net asset value has now climbed past $5 billion, underscoring the depth of institutional interest in physical uranium exposure. Moves like this don't just pull pounds off the market. They also add upward pressure on pricing and momentum in uranium equities. Meanwhile, long-term contract pricing remains firm at $80 a pound, maintaining a healthy premium over spot. That spread is a clear signal. While day-to-day spot prices may drift, utilities and long-term buyers are still securing supply at elevated levels. Bottom line, a soft spot print doesn't reflect weakening fundamentals. With financial players stepping in, long-term pricing stable, and physical inventories tightening, the setup for uranium remains strong. For equity investors, the signal is clear, demand is growing, and the market knows it. If you haven't already, be sure to subscribe to Uranium Spotlight podcast, available on your favorite podcast platform or on PurePoint Uranium's YouTube channel. India is reportedly planning to quadruple its uranium imports by 2033, with a major deal expected to be signed with Cameco during the G7 summit in Canada's Rocky Mountains this week. Cameco, one of the world's largest uranium producers, operates in the Athabasca Basin, not only the second largest uranium producing region globally, but also home to the highest grade uranium deposits on Earth. Canada's abundant, high-grade, low-cost uranium can easily meet India's projected demand. However, India has indicated it may also source uranium from Russia, which could be offering competitive terms. That's likely a result of global efforts, especially from the US and potentially the EU, to reduce dependence on Russian nuclear fuel, which may be creating oversupply in some Russian export channels. Looking at recent procurement patterns, since 2020, India has imported at least 6 million pounds of uranium oxide from Canada and 10 million pounds from Kazakhstan. Second, another 2 million pounds came from Uzbekistan. Third, Russia provided roughly 125,000 pounds of fully fabricated fuel, requiring about 1 million pounds of uranium oxide. These figures are current only to 2023, and any 2024 purchases remain unconfirmed publicly. India's uranium buying is entirely managed by its state-controlled nuclear sector, which is only just starting to open to private investment. As of 2020, India held about 21 million pounds in uranium stockpiles. Now they're planning to double that, according to reports. If all of India's under-construction reactors went online today, they'd require around 9 million pounds annually. Looking ahead, India aims to build 100 gigawatts of nuclear capacity by 2047, which would require approximately 44 million pounds of uranium a year, comparable to the U.S., which currently imports just under that amount to power 97 gigawatts across 92 reactors. It's worth noting that while 1 gigawatt reactors are standard and predictable in fuel usage, small modular reactors, which India may also pursue, have more variable uranium requirements. What does this mean for investors? India is rapidly scaling its nuclear fleet, and its future demand could rival the largest nuclear economies in the world. With Cameco positioning as a key supplier and Canada's Athabasca Basin offering unmatched uranium grades, this is a major demand signal, one that could tighten global supply and add long-term support to uranium prices. For uranium equity investors, it's another strong signal for sustained bullishness in the sector. Kazakhstan has officially chosen the suppliers for its 2 upcoming nuclear power plants, decisions that reinforce the deepening divide between Eastern and Western nuclear alliances. The first plant will be built by Rosatom, Russia's state-owned nuclear giant. The second has been awarded to China National Nuclear Corporation. While Western contenders like France's EDF and Korea Hydro and Nuclear Power were considered, the outcome isn't surprising. Kazakhstan is long aligned with Russia and China in the uranium sector, and this announcement further solidifies those ties. Kazakhstan already supplies a significant portion of uranium to both countries, and now with their help building its reactors, it becomes even more integrated into the Eastern nuclear ecosystem. Beyond fuel supply, Russia and China dominate the nuclear fuel cycle, conversion, enrichment, and fabrication, capabilities Kazakhstan will need to support its plants. In parallel, Kazakhstan and China recently signed a major uranium mining deal focused on a deposit that straddles their shared border, further deepening their cooperation. For years, Kazakhstan positioned itself as a neutral supplier, claiming to serve both East and West. But as global tensions escalate and competition over critical resources intensify, that balancing act is becoming harder to maintain. Uranium is now viewed not just as a fuel for clean energy, but as a strategic resource for technological powerhouses, AI infrastructure among them. And with the world's largest uranium producer now leaning heavily towards the East, Western nations will be forced to rely more heavily on Canadian and Australian supply. For investors, this underscores the urgency of developing new Western uranium sources. But with current production levels falling far short of future demand, the supply gap may widen, pushing prices higher and placing increased value on Western-based uranium equities. The World Bank has just taken a major step by opening the door to funding nuclear energy projects through its lending programs. It's part of a broader shift towards supporting reliable, low-cost energy infrastructure in the drive for global electrification and economic development. According to the bank's president, the funding will primarily target life extensions for existing nuclear reactors, grid modernization, infrastructure support, and the advancement of small modular reactors, or SMRs. While uranium wasn't explicitly mentioned, it remains the irreplaceable fuel behind all nuclear power generation. Extending the lifespan of current reactors means they'll require enriched uranium for decades longer than previously planned, securing a long tail of demand. And while SMRs won't materially shift uranium demand in the near term due to their size and rollout pace, they do represent a new incremental layer of long-term consumption. But this raises an essential question for uranium investors. Where is the fuel for all this growth going to come from? And will the World Bank support upstream uranium supply as part of the nuclear fuel chain? Will these funds help develop uranium mines in emerging economies like those in Africa, South America, or Oceania, where nuclear programs are just beginning to take shape? Will they support new supply from traditional producers in North America and Europe, whose aging reactors stand to benefit most from life extension investments? Or will this fuel ultimately flow east towards countries like China, India, and Russia, which are aggressively expanding their nuclear fleets? For investors, the takeaway is clear. This policy shift further validates nuclear power's central role in global energy policy and reinforces long-term uranium demand. But without a matching commitment to develop new supply, the imbalance in the uranium market will only grow more acute. As we mentioned, yesterday's uranium market got a boost after a strong show of investor confidence in the SPUT Physical Uranium Trust, or SPUT. In a matter of hours, SPUT initially announced a $100 million bought deal financing, but quickly upsized it to $200 million due to overwhelming demand. Canaccord Genuity has now agreed to purchase 11.6 million trust units at 17.25 cents per unit US, which is at or above SPUT's most recent net asset value. That's $200 million in fresh capital earmarked specifically to purchase physical uranium, both U3O8 and UF6, adding further pressure to an already tight spot market. The offering is expected to close on or around June 20th, pending regulatory approvals. What makes this notable for investors in uranium equities is the clear signal of institutional appetite, not just for uranium exposure, but for physical uranium itself. This move reduces available mobile inventory and strengthens the long-term thesis of supply tightness. Not surprisingly, uranium equities responded positively yesterday, reflecting renewed momentum across the sector. SPUT's ability to raise and deploy capital so rapidly continues to differentiate it as a real-time proxy for physical uranium demand, especially when the long-term contracting cycle is still gaining steam. As always, SPUT's offering documents are available on SEDAR+, and investors should review them closely. But bottom line, the financing round not only validates market interest, it could tighten fundamentals just enough to matter. And that wraps up your Uranium Spotlight coverage for this week. For more news and events from the world of uranium, please tune in next week to Uranium Spotlight.
You've been listening to Uranium Spotlight, your weekly podcast dedicated to delivering the latest news and events shaping the uranium fuel market and its critical role in the global energy landscape. Brought to you by PurePoint Uranium Group. PurePoint actively operates a portfolio of advanced uranium projects in the world's richest uranium district and has established partnerships with industry leaders. While our passion for this subject is undeniable, it's essential to clarify that the information presented here is not investment advice. Instead, our goal is to offer an unbiased and comprehensive review of recent events that could impact uranium prices. Join us again next Tuesday for Uranium Spotlight.